Good day, Divergence Traders. Today is Monday, October 23rd in the year of 2023. What a day we had today, huh? Yes. Anyway, this line here, I believe, is the low of yesterday. Oh no, not on this one. I didn't have them marked on this one. Jason. Okay. This line here is the low of Friday. Okay? And the high up there, whatever. It doesn't matter. But anyway, I just wanna make a point clear if there's anybody listening that follows the ICT guy. Last night, when the price was way up here, okay, up here, it was up here somewhere. I don't know when. It was in the evening, and he called it, and he made a video, and he said it's gonna go down, and probably hit the, I don't know, whatever he calls buy side or sell side liquidity, and look, it did it. And there's people that hate this guy so much. Oh, shit. Maybe they're jealous. I don't fucking know. Oh, excuse my language. But he called it, man. He called it. He says it's going to go right here. And look, it went there twice. What more do you want? These people who keep saying he's full of shit and whatever. He's obviously not full of shit. Like, he has the video right there on Twitter that he says it's going down here. It's not the same price you see on my platform because this is a Forex broker and they like to fuck with things and put different prices. So like this platform is about 100 points out of whack of the real futures contract. And it's not just because it's a CFD. It's them screwing with it. That's what it is. I won't mention any brokers' names. I'm just telling you they're a Forex broker. Forex brokers, ha ha ha. You want to stay away from them, let me tell you. This one here that I trade with, can't mention the name, is the best one I've come across. They still have messed with the, the price being out by 100 points, but yeah. So anyway, there's divergence up here in the UK session. I'll show you. It's one of my trades. See where the candles go above the two moving averages? Then they smack it down right here. Oh, let me make it bigger so you can see it. Jason. Okay? Right here. There we go. So here's the candles above. They smack it down. So you would have sold it right here on the opening. Right? Boom. But there's also divergence up here. Okay, it's very slight. It's very hard to see. We got a high and a higher high. See? And right here, this mountain peak is higher than this one. So you would have sold right here on this candle, closing down, giving you some gap right here. Okay? And down it went. So that was the divergence trade from here. And you would have made point. It went down like 70 points. And then this one here went down so beautifully. 130 points or so. And here's our higher close right here. Sell it, zero drawdown, ladies and gentlemen. And down it freaking goes, okay? Here's another one right here. Higher close, sell it, down it goes. Then you come over here, and I wish this was divergence, but it wasn't. Put in this low retracement and lower low by just a smidgen. It's not divergent, man. It's not divergent. However, in between here, we had a trade. We had a trade. Yes, we did. It's right here. It's We go and we put in a high, we retrace, and then we put in a higher high right there, right? And we got the mountain peak. This is Mount Everest coming down to the rock up in Sudbury. Okay, that's divergent. Right there. You would have got in. It's before the open. This is the problem. So if it was me, I'd probably put the stop up here. Okay? Or I'd just watch it. I'm like, actually, to be honest with you, most of the time I don't use a stop. You know why? Because I'm here watching it. You can't just put on a trade and walk away and, oh, look at the damn thing's going higher. You can't just put on a trade, walk away, and go, ha ha, yeah, it's going to work. It's going to go where I think it's going to go. You can't do that. So I watch my trade from the second I get in till the second I either close it with profit or it hits a take profit if I use a take profit, but I don't really use those either. And I don't use a stop loss because I like to, if it goes bad on me and I don't like what it's doing, I'll click out of the trade before it would hit my stop. But it is really good practice, though, to put a stop on and do your 1-to-1 or 1.5 to 1 or even 2 to 1. So anyway, would have got short right here. You put your stop above Friday's low, which was right here, you would have been okay, and it went down 91 points. And now look at it, eh? Still going. Still going, Mozi. So I did a trade here today. I did it on the 1 minute, but I did a couple scalps in here. So right here, lower close, buy it, up it goes. Right here, lower close, but it's below the moving averages, so that's not a trade. Right here is, though, lower close, still in the zone, right? Buy it right here, and up it goes. And here's another one, lower close. If you're brave enough to buy up there, buy it, and up it goes. Oh, they love to fool people, eh? They open up, they take it down here, and then they ram it right up your nose. Yeah, and keep going and retracing and stalling and going a higher high and stalling and going a higher high and stalling and going higher yet. Yeah, they love to do that shit. They love to keep people guessing. But anyway, I just want to say, congrats, ICT. You called it to a T right here, man. It went down where he said it was, well, right here, actually. He called it in the Asia session of Sunday night, and he said it was coming down here, and there it is, right there. It's amazing how he can figure that out, but I guess it's an algorithm. So he knows the algorithm. He knows where price is going to go, and that's the most important thing if you really think about it. There's a gazillion, trillion, billion, jazillion different ways to get in the trade. But how about getting out of the trade with the profit? That's the tough part. You know what I'm saying? That's it. And if you don't know where it's going, well, there could be consequences. Just like the little kitty says, tough titty said the kitty, but the milk tastes good. You ever heard of Tough Titty? Tough Titty, the kitty, Tough Titty. Okay, Jason. Okay, we got to move on, right? Yeah, we got to move on. But there was some nice scalp trades in here. I done them today. I wanted to participate in this trade and get in like right here. But I said, what if those bastards just take it right back up again, right? Because right here is right here, see? That's why I didn't do the freaking trade. See, let me show you. Right here, see? See? Right there like that. Oh, and it doesn't stay. See, I didn't want to sell right there because of that. To the left, always to the left. They're always looking to the left. But instead, they took it down nicely. I would have been like one and done if I would have been able to take that trade. But another reason I didn't take it is I don't want to start trading till 10 o'clock. See where it changes color? That's 10 o'clock right there. That's why I didn't take the trade on the open. I'm trying to stay away from it because a lot of the times it does this shit. It does a huge candle back up out of nowhere. And they know everybody's short. And then they ram it right up your freaking nose. That's why I say don't trade the first half an hour. Stay away from it. Wait till 10 o'clock or 5 after. Okay, let's move on. Sorry about rambling on. I'm just trying to make a point. So this is the S&P. We have the same trade. See right here? Well, here it's a double top. Oh yeah, it doesn't want to stick. Oh, these stupid lines and candles. It's like there's some glue, crazy glue on the candles. And you try and draw it and that damn thing does this. Shit. Sticks to it. There, it does not look nice, a nice straight line. So easy to do that on Ninja Trader, but not on MetaTrader. So there's the trade. And down we go. 21 points. And see, we had the same trade. See, it's the algo, man. It's the algo. Al is in play again. Same shit. And here's one of those higher close, sell it, down it goes. Right there. Right there was a good scalp. It was also hard to see divergence, okay? Right here to, yeah, somewhere up here. Like that. From here to here. And here is the arrow to sell it right there. And down it goes. 26 points. That was the UK session. I'm sorry. Oh, it's the same trade anyway. What about over here? Yeah, see, same trade, but we never got stopped out on this one. Let's take a look at this one now, ladies and gents. Right here. A high, a retracement, and a higher high. Let's just put it on there. See? And right here, same mountain peak. See, with the lower mountain peak? Yeah, see? And we would have got short right in there. And this pullback did not hit our stop because our stop would be up here. Okay? So we would have got short right there. Oh, look at it just running right up, eh? And went down 18 points. Now, oh, look, we have the trade that we didn't have on the NASDAQ. Look, check it out. Look. Low and lower low. Right there. Yes, indeed. Boom. If we tighten it up a bit now, make it smaller. See? That's divergent, man. See? Okay. So you would have got in here. Oh, no, I already showed you that. Here. I know I know people are laughing their ass off saying, look at that idiot. He buys way up there. Yeah, because I follow my lagging moving averages. Okay? Okay. So you would have got long here. Stop would have been 20 points. Did it go up 20 points? Almost there. Then it retraced. And right up to that pivot line, 29 points. You would have got your 1-to-1. No problem. Okay? Let's move on now to the Dow. Oh, we even have it on the Dow too. Wow. Same algo. It worked out. Let me show you. Same trade, okay. Boom, boom, double top. See, right up here. I'll put the line. Double top. Right there. It's divergent. You would have got in short right there. Your stop would have been about 24 points. Went down 150. Now let's look over here. Same trade, same algorithm. Al is his name. The name of the algorithm is Al. Big Al. When Big Al's printing candles, you better follow and pay attention what he's doing. Okay? Right here. Just like that. And we would have got short. Right there. Same place, same time, same bat channel. Right there, boom. Stop would have been only 31 points. And it went down to 160 points on the Dow. Let's look at this now. Same trade. See, high, higher, high. Right here. Boom. Sell it down right there. $95 points. And then we have that same trade right here. See, we didn't have it on the NASDAQ, but we had it on the S and the P and the Dow. Look at that, eh? Beautiful. Like a beautiful woman. Yes, indeed. Okay, what am I looking for? What am I looking? I'm looking for an arrow. Yeah, big freaking stop. I know. What else can I do? It still seems to work out. That's all that matters. Okay? Your stop would have been 120 points. And it went up 126 points. You would have hit your 1-to-1 win-loss ratio. All right, let's move on now to the pound dollar. Let's see what it gave us. Whoa, 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 whoa. Okay, so this is the UK session. High and higher high. Oh, is that not what I'm thinking? Yeah, it's divergent. Oh, I'm cheating a little bit. You gotta look at this like with a freaking magnifying glass. I think it's level, what I call level divergence. Yeah, it's level. I think I told you I used to be a bricklayer, so believe me, I know what level is. Let me ask you guys, do you know what plum is? Plum? Not the plum that you eat. Do you know what plum means? Bricklayers know what plum means. And we used to have a saying, when you're building a corner, level, plumb, tail. That's how you would make the corner the way it's supposed to be. Where it's level and plumb. Okay, Jason, shut up. These people don't give a flying F what plumb is. They know what level is. They don't care about the plumb. Okay, so we click on here. And we got a high and a higher high. Hi, how are ya? And we got the big mountain and the little itsy bitsy mountain there. See? You would have got short. Let me make that bigger. There, now you can see it. So we would have got short right in here, ladies and gentlemen, on the pound dollar. Right there would have been the entry. Stop would have been right here. 15 pips, and look, it went down 17 pips. Don't we wish we had divergence here, right? But we don't. We don't, because this river is deeper than this one. So they're both going down, see? There's no trade to buy it here. Other than a simple 5 EMA crossing up over the 7, over the 7 EMA. There was a trade if you believe in moving average crossovers. I definitely do. I definitely do. Yeah. Been looking at them for 2005, so that's 18 years I've been looking at them. I know which ones work, which ones don't. Not always, but most of the time. Okay, so there's the two trades on the pound dollar. Right there, you would have got in on the opening of this candle. Let's take a look at the Euro USD. Oh yeah, same kind of trades, I guess. Yeah, high and higher high. Big mountain peak, little mountain. You would have got short right there. There we go. You would have got short right on the opening of that candle. You had to be there exactly at that time to take the trade. 14 pips to the bottom, and we got a 10 pip take profit. Okay? And then, what do we have here? Looks like this one's higher. Yeah, it is. There's no divergence there. There's no divergence here to sell it. There's no divergence here to buy it. So there you go. That was the only divergence trade right there. That's it. That's all for the euro. And the pound yen, what do we got? We got a trade here. We're just going to do it from here. We're not going to cover the UK session. And you would have got short right there. Your stop would have been 16 pips. Went down 23 pips. Yeah, so you would have got your 1-to-1. And the same exact algo. See algo here? Algo's on here too. See? Low and lower low. Perfect setup. But look. This valley is deeper than this one. More water. Deeper water in this one. So we can't do it. The only thing you can do is have a 5 crossing up over the 7. And you'd buy it and up it goes. Okay, let's take a look at the euro yen. Same trade, see, right here. And there's no trade here or here. Same thing as what we just looked at. But I'll mark the one that there was. There was one. It's right here. Same entry, same time, right there. Sell it. Stop with 16 pips. Went down 21. You would have got your 1-to-1. Okay, let's now look at oil. And then we're going to look at gold. Fook. Not fuck. Fook. He's my student. He wants me to look at gold. So just for you, my good student, we're going to look at gold today, okay? We're going to look at it every day. I'm going to tell you, I'm going to show you how most of the time it's not divergent friendly, I don't think. Okay, let's move on to oil. Oh, oil, what a choppy mess. I was actually buying oil in here, and I took a little scalp and got out. Look what it's doing. Chop, 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 chop. Chop, 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 chop. Look at this crap. And then they take it down, the bastards. See, here was the divergence. Let me show you. Well, I have to show you this. I'll just show you this one here first. This is the divergences I traded today, and it did. I was expecting it to go back up here or up here, but it didn't do it. It didn't freaking do it. So I got out. It started stalling and I got out. Yeah, like I bought like right there and I could see, oh, it's stalling, it's stalling. I quickly got out, or no, I waited. It got in the next candle, this one, and it started coming down. I go, oh, you bastards are selling it back, aren't you? And I hopped out. I only took a few points, not much. Look at that. Right back down it goes. Bullshit. Bullshit on that one. Okay, so anyway, there really wasn't divergence here. But what there was, let me show you, is lower close, buy it, up it goes. Lower close, buy it, up it goes. This one, no, doesn't count because they closed below the moving averages. But here's one here. Lower close right where it should be. Buy it, right? It only went up a little bit. So did you, if you would have done this one, would have you got out here? Or would have you stuck with it and it went up? I don't know. But like I said, always the first two trades are good. After that, it gets a little risky. And then after that, it gets even more risky. And you can see what happened. Okay. That's crazy. All right, here we go, Fook. Here's gold. Let's check out gold. Let's make this a bit bigger. Okay. Did we have a what you call a round top? Put that in the middle so you can see it. Right there. See, it's kind of like a round top. I call them round tops and round bottoms. Anyway, this is the divergence on gold, and this is in the UK session. So we would have got short right there. Or actually, no. We just saw it. Would have got short on the opening of this candle right here. And then it would have went against you. Freaked you out. There's the scare stop. Your stop would have been here. Oh, look, the pivot's right there. Now, I would have put the stop right here above the pivot. Anyway. Would have got short. Stop would have been 28 points. And it went down 32. Now, over here. Look at this. See how this is higher than this? Yep. So this here is not divergent to sell it and it go down. There's no divergence to sell in here. Like, I'll draw the line on for you there, my friend. Okay, there's your high and higher highs. But look here, see? This needs to go down like this. It's not. It's going up. When they're both going up, it's not divergent. When they're both going down, down, it's not divergent. Okay? So, that's what happened with that. There was just the one trade over here. Okay? But let me show you something here. Last Friday. Okay? Let me show you this right here. It's beautiful. I'll show you this in a second. We'll go one more back. Okay? No, there it is, right here. Yeah, there was two trades. Right here. It's like a double bottom. This is gold, ladies and gentlemen. 5 minutes. You would have got long right there. It's been good the last few days. Okay? So you would have got long here. Your stop was very short. 28 ticks. Went up 74. Okay? then yeah, actually, oh, look, look, look. Let's see if we would have got it. We have a high and a higher high. And right there, see? And we would have got short right there. So we would have got short here. Our stop would have been 49 points. Did we get it? Did we get it? I don't think so. Got 42. Shy by 7 points. Okay? But anyway, then the next trade was a good trade right here. That's an ICT trade, see? Sorry, I gotta show ya. I'll try and make it quick. Okay, so 1, 2, 3. Yeah. So right from there, close enough. Something like that. On the top, I'm missing it by a tad and a tad. There it is, right there. Or did I already show you that? I don't know. Anyway, there's the entry for ICT right there. The fair value gap. Okay. But anyway, yeah, I already drew the line. Then I got sidetracked. So right here to right there. See, right here and right here, you would have got long right there. So many of the trades doing these divergence trades, yes, it's very delayed, the moving averages. Yes, it's very, slow and whatever for you to get in. But the bigger the stop you have, the bigger the take profit you will have. Okay? So think about it that way. So right here, we would have got long, and our stop would be down here, 60 points. Did it go up 60 points? Oh, yeah, it went up 140. To the top, it went 168.7 pips. Actually, it went even higher, 195 points. You see these moving averages that I have been using for years and fine-tuned it until I got it right? It's right here. You'll notice that so many times you'll get into trades and it'll go and it'll go and it'll go and it'll bend and it'll do this and do that and it'll hug and kiss the other one, but it doesn't cross for the longest time. Look at how all the way up the moving average did not cross back down here. It did not cross back down here. Even here, when price went right through it, the moving average still stayed above. The slow one, I'm talking about the 5. The white one still stayed above the 7. You gotta love that. Okay, there's the trades on that day. And then we'll go to today, or Friday. Okay? And there's a trade right here. Basically a double top. Yeah, it's a perfect double top right there. The price is equal on each side. That's why it's so straight. Okay, and you would have got short right in here somewhere. Those pivots that you see now, they're not today's pivot. I don't think they're the right pivots. I don't think it updates. Okay, so you would have got short there. Stop 14 points, went down 36. Then, oh, did we have a trade here? Yeah, we did. Look. They're pretty even, aren't they? I will call it level divergence. Come on, it's going to work. Okay. So right here, high and higher high. And the level divergence right here. Okay. You would have got the arrow on there in the trade right there. You would have got short. Your stop only 25 ticks. Went down 70 there, came back, and boom. It's like 100 points to the bottom. See that? And you see how the prices came up. They didn't go above the moving averages, but still. When this candle closed back down here, next candle, sell it, down it goes. It's a trade all in itself. Now, right here, oh yeah, it's right here. What am I talking about? Right here. What am I thinking in my mind? We have a low and a lower low. Okay. And right there like that. Taking a little extra time today to show my student gold. I hope a lot of you become my students because I want you to succeed as a trader and, you know, be good at it. And this really works. I show it to you over and over again every day. You know, and yes, you can find these trades in real time. Not long after the fact or long after the train has left. No. You'll be on the train right from the station when you do these trades. Trust me. So anyway, there's the divergence. We would have got long here. Our stop would be down here, 61 ticks. Went up 117, actually right to the top. Went up 177. Okay? Now, what about up here? Do we have something up here? It looks a little strange, but is there divergence there? Oh, yeah, it's parabolic divergence, baby. Woo, right up like that. And we have the Mount Everest down to the little mountains in the Himalayas. Okay? And that was a easy to see bearish divergence trade. Boom. Down it goes, all the way down, 180 points to the bottom. That's divergence again. Okay, let's look at today now and we'll be done for the day. Sorry, or did we already look at it? I think, yeah, we did. We already covered it. So there you go, my good student. We'll look at gold again tomorrow. So anyway, I just want to say once again, this is Jason Sweezy, and I love to trade divergence because it's very, very accurate. And it's very simple to trade it the way I have everything laid out. I don't have any squiggly, giggly lines like the stochastic or the RSI at the bottom of the chart. You see, another thing, this indicator, okay, let me show you. You see how it's for the below the zero line we got orange, red, and above we got blues, right? Well, if I reset it, this is how this indicator comes with 4 different freaking colors. So watch, I'll put that on. There, see how much more distracting and hard to see. Like the divergence is hard to see it. Yeah, because they have all these different size bars in the histogram and different colors. Yeah, it's just like me looking at it right now. I'm just going, oh, I'm confused. And for many, many years, I didn't think to do this. And I changed them so that all the top ones are blue and all the bottom ones are orange-red. Yes, indeed. And that's another reason why it's so easy and simple, because it's color-coded. It's color-matched, ladies and gentlemen. The same colors, well, no, this color is red. A dark red. But anyway, red and blue and orange and blue. So it's all color-coded, and it's easier to find the divergence than opposed to a MACD or this with all these different colors, or, you know, trading with what's even worse is trading with RSI and stochastic and whatever other squiggly line indicators people use. That's why this is so simple and easy to see it and trade it and make money, ladies and gentlemen. Okay, so anyway, I want to thank you for watching and listening, and if you could be so kind to, I know I'm kind of like begging you and talking sweet, but I really appreciate some likes, and if you haven't subscribed, please subscribe. I got a couple new subscribers yesterday. I want to say thank you for subscribing and welcome to my channel. Okay? So anyway, you guys have a good afternoon and good luck and good trading.